Good morning, everybody. It's Pax. Happy Capital Preservation Friday. Welcome to our weekly time together. Let me get some business out of the way first, though. Good morning, everybody. I'm Pax, and welcome to Place Your Trades Network. We're the network that focuses on trading daily options using CME event contracts to trade E-mini, S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude, natty gas, and copper. Today's broadcast, however, is brought to you by Tradeovate, which has built a custom app dedicated to trading CME Group event contracts. Hey, listen, everybody register for that trip to Vegas. Over the next month, we're giving away the trip to Las Vegas. One winner will join the Place Your Trades team at the Money Show on April 24th through the 26th. I'll be there. And I'm going to have a lot of fun. I'm looking forward to it. And I think members of my group, the PAX group, may be there as well. All you have to do is sign up to placeyourtrades.com. Go to placeyourtrades.com and sign up before March 1st. On March 1st at 4 p.m. Eastern, 3 p.m. Central, we will have a special show for you, and we'll spin the wheel to see who wins the trip to Vegas. I think something cool that I want to mention too is on the placeyourtrades.com website. There is a lot of different tools in there that we have provided for traders to be able to make better decisions in their yes/no contracts. Will we close higher or above? Those sorts of things, including some quant information, which should help you in your trading. But also there's a chat in the placeyourtrades.com website where many of us, Anne-Marie Band, Shy Girl, me, OG Trades, Julia, and Swing Pony will come in there and make some comments during the day about what they're seeing and what we're seeing in the markets and what's happening. It's a really, really cool little feature. So go in there and experience it and use it. So happy Capital Preservation Friday, my brothers and sisters. There's been a lot going on this week. I missed yesterday's trade. I was at a funeral all day long. It was a very expensive funeral. I didn't think that the market was going to do anything, but I've got a process that I use, that I stick with. That is, we've talked about the three things that a trading process needs to fulfill in order for it to be a useful and an important tool to be able to stick and stand by. And that's that your process needs to be consistent, it needs to be repeatable, and it needs to be scalable. If it is those things, then you stick to it. No matter what your opinions are, no matter what your guesses are. I look around Twitter and there are so many people with so many strong opinions. And you can see everybody when the market rallies, all of the bulls are, whoa, look how smart I am. When the market breaks, see, I told you, you schmucks, the market's going lower to sell the tops. I don't fade big market moves. I'm not going to sell a rally. I'm not going to buy a break. Traders who fade markets can make a lot of money doing it. But ultimately, as I tweeted out this week, this is a marathon. It's not a sprint. Those traders normally almost always go broke. I cannot tell you how many traders that I've known who have made 10, 20, 30, $50 million that have eventually gone completely belly up, including me. When I had walked off the trading floor, I had made a lot more money trading than I had ever lost. But, things get in the way. I got divorced. I invested in everybody's business. I felt guilty about making the kind of money that I did. I let my ego get the best of me, and I gave money away to everybody, every Tom, Dick, and Harry that had ever asked, So those sorts of things, when the world changes and businesses fail and things you invest in fail, as they did in 08 and 09, and a bank fails like MF Global did and takes the rescue with you, things happen, right? We have to prepare for all those eventualities. But we cannot trade in fear. We cannot live in fear. We cannot trade in fear. If we live in fear or we trade in fear, then whatever it is that we fear too often, we will manifest in our lives and in our careers. Scared money doesn't make money. I don't lose money trading, right? I always feel funny saying that. I don't lose money, but I spend money. I need to keep my costs low in order to be able to take as much money out of the market as possible. So as long as I do that and I do it one trade at a time, and I don't try to get too far ahead of myself, and I don't use the leverage that futures gives me to in a negative sense, I use that leverage in a positive sense. In other words, I am long above my process, which I'm not going to talk too much about, but I'm long above the opening range and I'm short below it. Yesterday, the trade, if I was actively trading, I wasn't. I was at a funeral. I would have been short at 41.63, as many traders in my group were. 41.63 down to, remember these levels. I always talk about levels during the week because I think it's important for our event contracts. Underneath 41.63, next target 41.41. Under 41.41, next target 41.20. Under 41.20, next target 40.99. Under 40.99, next target 40.78. I think I tweeted it out as 40.74. It's 40.78. Under 40.78, 40.48. Under 40.48, 40.35. Real tight one there. Under 40.35 down to 40.05. Under 40.05, 39.74. Then 39.54. Then 39.12. Rewatch this video because what goes. These levels won't change. They'll be targets in my plan always. Okay. 39.12, 39.54, 39.74, 40.05, 40.05 to 40.35, 40.35 to 40.48, 40.48 to 40.78. I think that's where we're trading now, close to it anyway. 40.78 up to 40.99 and then onwards and upwards, right? So write them down because those prices won't change. Now, when we are above the opening range or below it, I want to be long or short. And if I miss it, if it's too thin and whippy and choppy and I take a couple of trades, I decide to protect myself, then I'm going to initiate at one of these targets. And that's where I think it comes in handy to look at I don't like making my picks for the event contracts until after the market opens because I want to have a pretty clear idea as to what the market will be doing. We're above it, so I expect that we're going to rally, or we're below it, I expect we're going to break. And then to each one of my targets, I use as another version of the opening range. So if I'm not long or short at the opening range, I can take a trade at one of those targets. And I don't usually take, if we're below the opening range, I'm not going to take a long. I'm going to look to be short from any one of these areas because I'm a momentum breakout trader. Now I'm going to protect myself in what I call my 2x4. And as long as I protect myself, and what I mean by that is I'll take two trades, and if I don't find the momentum of the market after two trades, and if I take two expenses, not losses, but two expenses in a row, I'm going to cut my size and give myself two more trades. And after four trades, if I don't find the momentum of the market, I'm clearly not seeing it well, or the market isn't trading it well. So every 2x4 that I do, I know that I'm going to protect myself above all else. If I protect myself above all else, and I'm actively involved in the market to find the momentum of the market, now I have nothing to fear. The market can't hurt me. If I sell 72s and the market goes 72 bid, I'm quick in my execution. I've been doing this a long time. I'm going to get out. I'm not going to wait for the market to go 74 bid, 76 bid before I get out. If I sell 72s and that market doesn't go 71 offer, I'm looking to cover. So in that aspect, I don't have anything to fear. And I know that I'm not going to take any more than 2 to 4 trades at it before I decide to wait for the market, put myself on the bench and decide to wait for the market to become a little bit more obvious to me. Remember, there's only 2 parts to every trade: managing risk and managing profit. And there's 4 lanes of traders. There's traders that are consistently losing money and they don't learn how to manage their risk. Then there's the category that I think most of us that we spend most of our time in, and that is the break-even trader. That trader learns how to manage his risk, but not yet his profit. Then there's a consistently profitable trader. That trader's learned how to manage risk. He's learned how to manage profit, but he's not learned how yet to exploit his profit. Then the consistently profitable trader hopefully will move into the ultimately a profitable trader who knows how to manage risk, knows how to manage profit, and he knows how to exploit his profit he knows how to increase his size without significantly increasing his risk. So if you know that this is possible and you know you will protect yourself above all else, you're not going to over leverage, you're not going to over trade, your stops aren't going to be too wide. You're not just going to keep stabbing at it until you find the momentum of the market. You're going to be disciplined. I don't like using that word because nobody seems to ever, everybody uses it, but nobody ever really seems to define it. But for the sake of brevity here, we have to be disciplined enough to stick to our process, not our opinions and not our best thinking, not our guesses, not what our charts are telling us, lagging indicators are telling us, but what the market is telling us in real time, using real-time information to make real-time trading decisions. As long as I'm not going to overtrade that, over leverage, too wide of stops, and do it again and again, I know that I'm not going to blow any accounts. And if I know that, now I can leave myself open to managing my profit, to the good things that the market has for me, because I've managed my risk properly. I've managed my risk to the point that I don't lose money, I spend money. I had a trader not long ago that I mentored tell me that he had $100,000 of risk capital in his trading account. I asked him what he meant by that, and he said that's what he's willing to lose. He's willing to lose $100,000. I corrected him and said, no, you're not willing to. The money in your trading account is an asset that you need in there in order to make more money. The money in your trading accounts is inventory. That inventory is what you need in your business in order to make whatever, in order to exponentially grow that. The way that we do that is if I've got, again, 50,000 in my trading account, I'm not willing to lose it, but I am willing to spend some of that every day to make money. And if I'm trading 4 lots in the E-mini S&P, I should not be spending more than $800 in a day. If I spend more than $800, I'm over trading. Remember, 5 points on a 4 lot in the S&P is $1,000. At this point, if you're trading in the minis and you've learned how to work your process and to stick to your process, that should not be an insurmountable amount of money to be able to make. And if you can be satisfied with making that $1,000, that anxiety and that nervousness that you feel every time you put a trade on dissipates, because you know that the market is going to do something and you know that you're going to be part of it and you're not going to lose money doing it. You will spend money doing it, and that's acceptable. You're going to spend money in order to find whatever momentum the market has for us. Yesterday, underneath 41.63, market goes to 41.41, profit taken. We go to 41.20, profit taken. 40.99, profit taken, maybe flatten there. We get underneath it, reestablish that position. Trading like that, keeping your expenses tight, as I tweet and I talk about, will give you a lot of really, really good benefits in the markets. But if we're over trading, we're over leveraging, we're only going to find ourselves in a world of trouble. And believe me, my brothers and sisters, I have created more trouble for myself and my family than what I care to recall and what I care to remember. I have made more mistakes than you guys can possibly imagine. I've been doing this for 25 years. Most of you know my story. I was a very big trader in the NASDAQ pit. I can move the NASDAQ by myself. I was that big of a trader. I can move the NASDAQ 50 points, 100 points. Now, of course, if Goldman came in and, paper had different ideas, and I'm not going to be able to move it that much, but I can paint the tape and I can create momentum in the market quite like the algos do now. And one thing that I learned early on in my career, the day that I lost $1.5 million in 30 seconds in the biggest rally in NASDAQ history, and it still stands. Look at a historical chart, January 3rd, 2001, NASDAQ had a 26% rally in about 2 minutes, 3 minutes. And I was the only trader in that pit short. I lost over $1 million in less than 2 minutes. It was an unbelievable rally. Nothing traded between 2020 or 2000 in the NASDAQ up to 26.5. And I covered at the high of the day at 26.5. I covered where there was offers. But what I learned that day was the most valuable lesson that I think that I've ever learned in any one trade in my life, even though it was my worst loss percentage-wise in my net worth that I've ever had, that I'll ever experience. I'll never experience anything like that again. But what I learned that day was that I've got nothing to fear from the markets. The markets can't hurt me. Only I can. I can hurt myself. The markets can't hurt me. So if the markets can't hurt me, I have nothing to fear from the markets. And I've heard many traders say to me, you must have a healthy fear of the market. I don't think so. The markets don't care about me. The markets are completely neutral. And the information that the market gives me is completely neutral in nature. Does it favor me? It doesn't disfavor me. In that aspect or in that standpoint, I have nothing to fear from the markets. All I have to do is manage my expenses and to be present for all of the good things that the market has for me. We get nervous and anxious because the outcome of the trades that we make is uncertain. Well, as I described earlier, if I sell 71s, if I sell 72s and the market goes 71 offer, to me, the outcome of that trade at that point is certain. I put in a scratch stop and I'm not going to lose any money. The market is either going to go and it's going to pay me or it's going to come out and scratch me out, in which case, no harm, no foul. The traders in my group hear me say that maybe 4 or 5 times a day when I scratch out a bunch of trades, which I am, of course, willing to put right back on if price holds. But I'm not willing to lose money. I'm willing to spend money. I hope this makes sense to you. So with these same levels in mind, let's take a look at our event contracts today and let's make some picks. So let's take a look at our event contracts today. I have to get a little closer because I've got old man eyes. For those of you who have been going to the Place Your Trades website to see my picks are, I always take the long shot picks. But since the market makers here have tightened up the strike prices, they become a little bit, the strikes have become just a little bit more expensive. So because they become a little bit more expensive, we've got strikes at every 10 points with the prices just a little bit more expensive. So I'm not going to take I'm going to start taking more of the low hanging fruit. I'm not going to take the wider strikes and try to get, for $1 or $2, try to get a bigger return. What I love about the event contracts too is I get to spend a little bit of money. I know what I'm going to spend in order to make a lot of money. And if the market is kind of thin and whippy and choppy out of the opening range, or the market just isn't giving it to me, or I'm not seeing it, I can take an event contract trade for just a few dollars to go ahead and say, this market is going higher. I'm just not able to establish a good position without having to over leverage or over risk. I can't keep my expenses low. So the event contracts come in very, very, very handy at that point. Obviously, we broke like mad, right? We had a university yesterday. We broke 100 points, in the S&P. We made a big low at 40.78. I think that's a big spot. But we reversed on everything. We had an outside reversal move down to that 40.78 area. That puts 42.08, I think is the high of this move. That puts that as a good high. 41.87 is my major target on the upside. And I've been talking about 41.87 now for a couple of weeks. That is a flatten area for me. My flatten areas are 39.12 and 41.87. Okay, we get down to 39.12, I will flatten. And that's where I will consider taking along and reversing my position. As at 41.87 last Friday, I flattened up my longs and I got short at 41.87. I wish I was still short those. I mismanaged that trade. But the point is that those are my flattened targets are the only places that I'll consider taking an opposite side trade at. So 41.87 held in my mind, 42.08 held, and it looks like the market is starting to tail off or starting to break. My process would have had me short. My opinion would have had me flat. I was at a funeral, so life had me, out of the market. But I think that we hurry up and wait now until CPI on Tuesday. The market is waiting for that all-important CPI number. Each month, the last year or so, we've had huge moves each month off of CPI. So maybe we sold off because the markets were overbought. I don't really know what was going on. I know that we had a lot of options expiration yesterday. Maybe that moved the market. I really don't care why we moved. I don't care what the story is. I just care where price is going to be, one rung at a time. So in these rungs, I think that we take the yeses. I want to go with Anne-Marie Straddle. And when the markets open after the opening range is set, I will post my picks in the Place Your Trades website. So I'll post mine then. But let's talk a little bit about what I think that we can do. If the opening range sets and we hold, we need to get above 40.78 and then 40.99. So I would take the yeses for $6 above 41 even. If the market is still oversold and we're going to sell off, it's kind of interesting to see this too, because the strikes on the downside are a little bit more expensive. I think that easily we can see 40.5 and we can close underneath it. So I would take the nose at 40.50 for $5. I don't like guessing. Okay. I don't like trading my opinion and I don't like guessing. I was bullish until yesterday's break largely in the market. Now I'm more neutral because, like I said, 42.08 becomes a good high. 41.87, my major upside target, held. And so now the market is under those things. So I'm a little bit more bearish in sentiment. I guess I'm more inclined to take in the S&P. I'm a little bit more inclined to take the nose of 40.5. All right, NASDAQ strikes. I saw people tweeting yesterday about the Russell. The Russell was really, really strong into last week after the Fed. 1986 in the Russell matches up with a huge level in the NASDAQ, 12,808, matches up with a huge level in the S&P, 4187. 1986, 12,808, 4187. All the indices came up to those levels last Thursday together, right? This huge rally that we had off the FOMC meeting, and we came up and we accomplished those levels. The Russell held that level while Friday the S&P broke off of unemployment back down to 41.41. The S&P and the NASDAQ both reclaimed those levels of 12,808 and 41.87 and kind of churned them until they decided to sell off yesterday. The Russell never got back to it. So the Russell was either lagging in strength or leading in weakness, depending on how you're looking at it. The NASDAQ, I think, is at some really, really important levels. Does anybody remember the importance of 12,339 in the NAS? 12,339 was that high on CPI Friday, December 13th, when the S&P rallied up to 4180 and the NASDAQ rallied up to 12,339. And what's significant about that is that CME's velocity logic kicked in and it acted like a limit. So we could not trade any higher. In fact, the NASDAQ market closed for a couple of seconds. It froze. And the CME velocity logic, we could not trade until the liquidity came back into the market. The market remembers these prices. Markets have memory. 12,339 is a very, very important price. So we're opening at it, okay? But I believe that Monday was weaker in the NASDAQ than the S&P was. Looks like the S&P caught up yesterday. It wasn't in front of the screens, but I am going to take the nose. We're opening at 12,339, and as long as we're below there, anybody, don't forget what the 200-day moving average is, which is, I think, 11,970, if I'm right. The 200-day moving average in the NASDAQ is around 11,970. So I will take the nose, certainly for $6. I'll take the nose in the NASDAQ at 12,250. For another 200 points, the nose of 12,200. No, I'll take the $6.25 nose. It's a low-hanging fruit at 12,050. If we do get up and sell off, I do like the $1.75 nose of 12,100. I don't think that that's out of the question. But again, I'm going to let the market open and I'm going to let the opening range set and we start trading above or below before I make my final decisions. Let's just say that the opening range of the NASDAQ is 12,330 and we're trading at 12,350. I'm going to be more inclined to take the 12,450 yeses. One thing I can say is that technical analysts are paid to think about the market, to provide their opinion on the market using lagging information. I don't consider myself a technical analyst. I use the term technical awareness as opposed to technical analysis because I'm a trader and I need to be able to take real-time trading information and make real-time trading decisions on it. If I don't see something clearly today, I'm going to take my 2x4 and I'm going to shut it down and I'm going to protect myself. And I can take some event contract trades because it's only going to cost me a few dollars and I can still have a solid profit potential, right? I'm not going to overtrade the S&P or the NASDAQ today. I'm not going to overtrade anything. I'm going to let the market come to me. I am not going to spend too much money on a Friday. I have ruined too many weekends. It's why Capital Preservation Friday is very, very important to me. Something that I came up with years ago. It's something I teach all of my traders. Capital Preservation Friday gets me to Monday. It helps me not be afraid of what I can create to what I can do to myself in the markets. And it sure helps me not to be afraid of what the market can do to me because the market can't hurt me. So fear doesn't have any place in my trading. If fear doesn't have any place to my trading, then obviously I trust myself and I open myself up to all of the good things that the markets have for me. So take it easy on this Friday, my brothers and sisters. We're going to have some great volatility next week. We are going to have some really, really big trades next week. Keep your powder dry. If you see something clearly today, take it. We're here to make money. We're here to create wealth, and we have to be involved in the market to be able to do that. Scared money doesn't make money. If you're afraid to make money, if you're afraid to lose money, that's what you'll do. You'll lose money. Don't be afraid to spend money because, again, scared money doesn't make money. If you are afraid to lose money, that's what you'll do. Be willing to spend an X amount every day. If you trade 4 lots in the S&P, your expenses should not exceed $800, maybe $1,200 on the upside, because that's what you make when you get to a 5-point trade. I hope this makes sense. I think I threw out a lot of information, maybe a little bit too much, maybe a little bit too many prices out there, but go back and rewatch this again and write those prices down because this is where the market is going to trade. I am technically aware. That helps me remove my fear and to control it so that I'm confident, I'm carefree, I'm fearless, and I'm focused. CCFF. I'm confident, carefree, fearless, and focused. Everybody, have a great week. Have a great weekend. Spend time with those that you love. Don't spend too much time in front of a chart over the weekend. You'll drive yourself nuts. The market will tell you what to do today, and the market will tell you what to do next week. Have a great week, and we'll talk about CPI next Friday. God bless you all. God be with you all.